How's it, guys? And welcome to this week's mentorship video. So I've decided to do something a bit different, not really specific about any topic or any bias, but I'm just going to look at a few assets here, obviously including DXY, dollar index, and I'm mainly going to be focusing on the higher time frames. So we're talking of MWD, monthly, weekly, and daily. So there is a couple of things, right? There's a couple of things that as a trader you have to be aware of. You have to understand in order for you to come up, say, a bias or whatever directional way that you're going to be trading. But prior to that, there's things like fundamentals, knowing what is moving the markets at that moment in time, and also looking at the technicals. Are they aligning with your fundamentals? As most of you in the group already know, we do need fundamentals to fulfill what? Our technicals. So it's not just a case of looking at the chart and then you can do your analysis and see, okay, our market is bearish or market is bullish, so I must do this and this. No, it's not always about that. You also have to know what the powers that be are doing in terms of price manipulation and all that, or say what's happening in the market, how is it going to affect price movement on certain assets, right? So for instance, looking at dollar index, right? So we're just in the first week of September, and we've got NFP on Friday. Yes, we've got NFP on Friday, the 6th, and then it's those things that you have to be aware of, right? You have to know what is going to be moving the markets. So everyone right now, all their eyes are on NFP, right? So you have to understand what effect is NFP going to have on the market. What is the assumptions? What number are we looking at? Are we going to get a negative or a positive release? But from what I've been teaching you guys, right, it's not just a case of focusing on that NFP number and then you're done with it. It's going to give you forward guidance. Right now, the forward guidance that we have in the market was done 2 months ago, 3 months ago. I think that's the FOMC of let me just double check, the FOMC of April and May. That's when we got the forward guidance that we are using ever since. You see, that's why I was strong bearish on what? On dollar, because of the forward guidance we got from the Fed. And that forward guidance came about when dollar was in premium, you see. So it's not a coincidence. Dollar was in premium range, and you can see specifically this monthly bearish order block, and you can see from there since when did this? April, May, that's the 31st, that's when we had FOMC, right? Since that time, so we're now in September, August, July, June, you see, April, May, June, you see, this is April and May, these two almost identical candles. Then after that we had a redistribution in June, and then July markets started moving away from a consolidation, right? That's on the monthly chart. Market started moving lower. So what I'm saying is the forward guidance we got already at that April-May meeting was for a bearish. dollar. But in August we had further input in terms of dollar getting weak. You see, when we started getting worse than expected fundamentals from the United States, and I think it's gonna carry on until probably the end of this year. We are going to get bad fundamentals from the United States. See, just like what we saw today. If you have been on the market, you can see today we had quite a few negative releases on the calendar in regards to dollar index. You can see the job openings fell big time. You see, so it's those type of things that you need to be looking at when you're doing your analysis. So now, say for instance, we're looking at this dollar. So take note, guys, this recording is going to be more of a class session. I'm going to be covering a few aspects of the market, what you need to look at, what is it that you look out for when you're looking at a chart, right? I'm hoping it's not going to be that long, maybe a few minutes, maybe 20 minutes or so, 30 minutes. But yeah, that should be enough for me to at least talk about something, right? To vent a bit on the market aspects. So when you look at dollar, right? For instance, right now, when you look at dollar and you're asked, where is dollar, right? Dollar is right here, right? This is where dollar is at, inside a monthly bullish order block, and we've already run the stops right below these candles here. We've already run those stops. As you can see, price is dipped in below. See this candle here. So we've got internal range liquidity of sell stops below that, and price has traded through. Why do I say internal range? Because we still have this old low here in discount that is still exposed in terms of market having to reach out for that. You see, this old low is pretty exposed and it's in discount. What discount, Ivan? This fair value gap here. See that fair value gap. Now I can go as low as this candle slope because that's the one that's still open. You see, so we've got internal range liquidity of sell stops below this old low. And what are the chances that we're gonna make a run for it? Chances are very high. So for the remainder of the year, right, expect dollar to reach out for 99.50, 99.50. So you can see here, this is just a basic technical forecast that I have done, right? Based on what? Based on the draw of liquidity. Market is always drawn to imbalance. Imbalance represents price action where price is likely to be drawn to. Now if price is drawn to imbalance, it can also be drawn to imbalance in the opposite gap before it moves to the downside. So if I'm looking for a bearish dollar, where do I look for shorting opportunities? This imbalance here. See, that imbalance on the monthly chart represents an ideal area where I should be hunting for shorting opportunities, targeting first previous month low. You see, targeting previous month low. But you can see already this low here is pretty much done. By the time we get to next FOMC, that's 17 and 18 September, so that's in 2 weeks time, right? We're gonna get Powell and company, and there's only three meetings that are left now for the year, and the forward guidance, the projections that are there is we're going to get rate cuts. Some are still talking of 25 basis points or 50 basis points. I'm not pretty sure about what we are going to get, so I cannot speculate in regards to that. So with that in mind, I'll still maintain that dollar is heading for the down side, in terms of yearly projections, if we do reach out for 99.50, right, 99.50 by the end of the year, that will be target reached in terms of this year's projections on dollar index. If you remember correctly, February, March, we were already talking of hunting for shorting opportunities in dollar index. Our bias for the dollar this year is bearish due to also like seasonal tendencies, mainly election year, the election year in America, and dollar tends to be bearish during election year. So with that in mind, expect dollar to trade to the downside. So it's a case of you now identifying your premium areas where you're going to be shorting from, and already I've highlighted this fair value gap. I don't see price trading back to this order block here. Even if it does, this order block is not high probability, see, because it's not accompanied by a fair value gap, right? I urge you nowadays to pay more attention or use order blocks that have got a fair value gap in your entry points. They provide high probability setups. I'll show you one on NZD/USD, then you can see from that. So once we have this imbalance here, so expect price to be drawn to premium areas that are inside this liquidity void here. So I'm going to go to the weekly chart. So this is the weekly chart, and what's interesting is 2 weeks ago we closed below this bullish order block. You see, we closed below this bullish order block, right? This candle here closed below, but we still have, let me remove this, we still have this imbalance here. You see, now that's on the weekly chart, guys. You see, remember we've got a monthly fair value gap, but this now is inside our weekly time frame, and you can see this is now more ideal in terms of, okay, we need to see price trading into this range. Once we get into that range, then we should see lower prices targeting 99.50. That's your long-term target, 99.50, but previous month low, which is right here, previous month low right there, could be also a target, but ultimately you're talking of 99.50 institutional price point. So you can see this fair value gap here, this imbalance on the weekly chart, that represents an ideal area where you should be hunting for shorting opportunities. So if you go to the daily chart, right now, going on to the daily chart, you're basically just minimizing your your risk threshold, your exposure on the markets. You see, now we've got a bearish order block that is accompanied by a fair value gap that makes it high probability. You see, all this came about from looking at that monthly chart, and all these areas that I'm marking now, they're inside our monthly imbalance, right? So the further you go on to a lower time frame, the better, because you're going to be more precise in terms of your entry point. So you can see here, this is our old low, right? Now this old low here, you can see that's where my arrow is. See, that's where the arrow is, right there. So you're talking of 102, 102.10, 102.20. That's an ideal area for you to be looking for shorting opportunities on dollar index. You see, so this is just a random look at, say, an asset. What is it that you're supposed to look at? How do you come up to a decision to say, okay, I'm going to be doing this, I'm going to be doing this? So we are bearish on dollar ever since March, April, May. We've been bearish on dollar. So looking for premium areas that are going to provide opportunities for you to short is what you'll be doing, right? No need to be focusing on longs. Yes, you can, but that's basically you are going against the trend, and you can see already, right? If I could just go to the daily chart, you can see from here. So this is April, right? And then we're the redistribution phase. That's October 2023. Boom, market fell off. You see, then January up until April we had a redistribution phase. Market preparing for another shoot to the downside. Up here, this is when we started getting forward guidance from the Fed that we might be looking at cutting rates, and then dollar started going lower, right? So it's a case of having a clear understanding of what's happening in the market before you make any decision to say, okay, I'm going to short dollar index. You need to understand the narrative of what's happening, right? So I'm going to look at another asset. Let's see, CAD. Of course, we've already talked about dollar. So USD CAD, USD CHF, and USD JPY are going to be bearish. And then when you look at, say, pound USD, which is the opposite now of this is exactly a mirror image of the opposite of dollar index. So if you're bearish on dollar, you're looking for longs on euro USD, right? So the same analysis that I've done on euro USD is the same that you should do on euro USD. The same analysis that I've done on dollar index is the same analysis that you should do on euro USD, but in this case now it's just vice versa. You're looking for longs. So you can see on this monthly chart we've got the imbalance right there. See, this is our monthly imbalance where we're hunting for longs to the upside, where we are hunting for bullish trend, right? If I go onto the weekly chart, now on the weekly chart you can see here there's no fair value gap as in comparison to dollar index. You see, there's a gap here, but euro does not have. So euro has already rebalanced. See, there's no fair value gap, only this small one here, right there, right here. That's our fair value gap on the weekly chart. You see, that will be the fair value gap on the weekly chart. If you go to the daily, you should see a bullish order block at that level, right? See, this is our bullish order block right here, which is now accompanied by a fair value gap. So the lower you go onto a lower time frame, the better. You can see already how price offered a move to the upside. It might look like it's small, right? But that's a trade. If you're talking of standard lots here, this is a proper trade. You're looking at more than 30-40 pips there. And if you're talking of standard lot size, that's a trade, see, which you would have properly looked at, properly analyzed. If I come to NZD USD, right, you can see there's the trade that I gave on the group. This move here to the upside, right, that was more than 25-30 pips. And if you're day trading, if you're short-term trading, that's a good return. And you can see price was in fair value for longs. So this is NZD USD. If we are bearish on dollar, NZD USD is poised to go to the upside. This one also was fulfilled by Aussie dollar, creating new lows. So that's divergence between Aussie and NZD USD. These pairs are correlated. When one pair makes a lower low and the other one is returning to fair value, longs are ideal. You see, so I'm not going to go into detail with the divergence. That's for another day. So coming back to euro USD, so you'll be looking for long opportunities, right? So if you are going to be studying your price action, right, the moment you open a chart, guys, it should tell you a story. The moment you open a chart, you should see the story behind that chart. What is price telling me? What am I supposed to be looking at now? See this bearish order block, that's on the monthly chart on UJ, right? And it's accompanied by a fair value gap, right? Now this is UJ chances of it going to the upside very high, because BOJ always does their interventions on how UJ is on the Japanese yen. But from a higher time frame point of view, you're looking for shorting opportunities on UJ. Once you have come up to that decision, it's a case of you identifying, right? It's a case of you identifying the premium levels where market is likely to find resistance before it pushes to the downside. So for instance, this is month of September, and we've got August here, and then there's July. June is a bearish order block, high probability with a fair value gap, but we've got two levels that have got imbalance. And your target, you can see there, previous month low, right? That's a target. Previous month low, that's a target. Do we have any imbalance right here? Right, we do have right there. That's a target. While we are looking for dollar to trade to the 99.50, 99.40 levels, UJ should drop towards the 137.50s, 136.50s. You see, that's how you have to be looking at price. You'll be looking for UJ to move towards those levels. So price is going to be drawn to internal range liquidity of sell stops. So for class purpose, we're going to look at this imbalance here, the second one. This area here is way further away now. You see, we'll only react to that once price returns to those levels. I'm not sure when, right? So we're going to go to the weekly chart. Now on the weekly chart, you can see here, right, this is our weekly chart. This is our imbalance, which now stretches up to this level, but we're going to focus on the weekly imbalance. What do we have? Bearish order block. Though it's not high probability, right? Though it's not high probability, we'll get a high probability if we go to H4. There, you see this one here, this order block here, where we had the expansion to the downside, redistribution into fair value. H4 bearish order block, accompanied by a gap. Price comes back, boom, that's a trade. Second time price comes back, it didn't run the stops though. You see, price came back to that level again, boom, market crashed. This is this week, I'm sure. So this is on the 2nd of September. You can see there, before New York closed, market was already in premium, and then you told me this is a coincidence. It's not. That is a trade, guys. That is what you should be aiming for. You see, so for now you can see price is targeting 141, right? 141.70, 141.80. That's the target on UJ from premium levels. Right now the premium level that we have is this H4 bearish order block, which is inside a daily bearish order block, right? This is our daily bearish order block. If you go to the weekly, you can see that weekly bearish order block. That's the one where that H4 is. You can see this weekly candle. See, this is the current weekly candle. Market opened, pushed to the upside, then crashed. You see, so the only thing that's going to push price up now is probably a positive NFP, but chances are very slim, right? Let's see what are the projections for NFP on Friday. Let's see what are the projections. So we're gonna go to Friday NFP. So estimate is 164, previous was 114, so they're expecting a higher number. The forecast for NFP is 164. That might be a bit hard. That might be a bit hard. Where is the unemployment rate? 4.2, previous was 4.3. So they're forecasting a lower unemployment rate. That could hurt the dollar. That could hurt the dollar. And if it hurts the dollar, UJ is gonna flush out to the downside towards 141. You see, so that's how you have to look at the market and apply now all those aspects of institutional order flow that we learn in the group, from premium to discount arrays, you know, to your institutional pairing. If you're going to be looking at cross pairs, you have to look at your institutional pairing, high versus low rate countries, or low rate country versus high rate country, and then you couple that with the bias of dollar index. Let's see if we can get an example. Let's see if we can get an example. Let's see if we can get an example so that I can just illustrate to some that might not really understand what we are talking about. Where are the central banks? Where are the central banks? Just a sec. Okay, I need my central banks here. I need my central banks. So I'm just gonna look at maybe one or two. Yeah, just one is fine. One is fine. So let's see, what do we have here? So we've got UJ, USD CHF, Euro USD, Pound USD. Okay, so let's see, where are the rates? Where are the rates? Okay, this thing is taking forever. So institutional pairing, when you're looking at it in terms of the currency pairs that you're going to be trading, basically you want to find a currency pair that's going to gain or lose strength against another, right? So in times of in times where we've got higher rates, and some countries now are reducing their cutting their rates, there is opportunities. You see, there is opportunities in the markets. Okay, let me just see central bank rates. Seems like investing.com doesn't want to open, right? So you can see here the Fed, the American Central Bank, they've got 5.5 as their long-term interest rates, and the last change was June 26, 2023. Right now, if you look at say the major countries, you see Canadian Central Bank, 24 July was the last change, right? Market it was at 4.75. now they've got 4.5. I'm sure they kept these rates unchanged. We had BOC on the calendar today, they didn't change their rates, right? So I need one that has got, say, quite a difference in terms of rates. So you can see here JPY, BOJ has got 0.25, New Zealand has got 5.25, Swiss has got 1.25. So high versus low, you're looking at bullish, and then low versus high, you're looking at bearish, right? So let's see if we can pick one. Where's UK? Central Bank of Great Britain. Come, I cannot see here. European Central Bank, they've got 4.25. I'm just looking for currency pair that we can pay. Pound 5%. So if we are to pair pound high versus against the yen, pound yen, right? So in terms of rate differentials, if you look at pound JPY, you should expect bullish, right? You should expect market to be moving to the upside, but you can see there that is not the case, right? That is not the case. Market is actually going to the downside. Why is that so? Because we've got a weaker dollar, right? We've got a weaker dollar. That's why this price is going to the downside. Let's see if I can pick another pair. Euro JPY is going to be the same. It's also going to be bearish. We need a strong dollar for the currency pairing of, say, high versus low to be bullish. You see, we need a strong dollar. Let's see, what else do we have? 5.25, that's NZD. NZD AUD, right? So we've got high versus AUD NZD, NZD AUD, AUD NZD. What do we have in terms of the pairing? NZD AUD. You see, there's no clear direction here. Market has just been consolidating ever since, but yeah, it's trying to go to the upside. So NZD has got 5, AUD has got 4.35. that's high versus low. Yeah, but the bullishness is not that well defined, you see. So that would be a bit of forcing the issue in terms of what you are looking for. But yeah, just to summarize, guys, I couldn't pick any currency pair. Okay, this thing is down. Yeah, this thing is down. This would have been, because I've got my central banks here. Let's see here. Central banks right there. Let's see if it opens. Oh, there we go. Finally. You see, because this one has got quite a lot and I'm not even interested in some of these things. So we're talking of, say, Swiss National Bank has got lower rates. Bank of England has got higher rates. What do you think is going to happen to pound CHF? Pound CHF, GBP, CHF. You see, that's the thing, guys. Cross pairs, they're not that much of an easy in terms of directional bias, because a lot affects these current pairs. So BOJ is 5.5. So when you look at, say, ECB, right? ECB has got 4.25. That's the euro, right? And then you have something like so that's 4.25 paired with, say, a currency pair like Bank of England, right? A pound. That's low versus high. Talking in terms of institutional pairing, Euro GBP is supposed to be bearish, right? Euro GBP is supposed to be bearish because that's low versus high, right? So Euro GBP is supposed to be bearish, and you can see that's what's happening. But price has been finding support now at this discount area, but all the while you can even see here, look at last month, right? This is last month. That would have been a good trade. The high of last month went right into a bearish order block and market crashed. You can see there. Now this is where things become interesting, right? So on the monthly chart, you'd have marked that level and you'd have known and understood your institutional pairing that we've got a weaker pound in terms of rates. This is institutional pairing now using interest rates. In terms of interest rates, you've got euro with lesser rates, we've got pound with higher rates. So directional bias based on that, market is supposed to go lower, right? And you'd have marked your institutional order flow: monthly bearish order block, monthly bullish order block. That's your level. You see, that's already an area of interest in terms of where you're going to be hunting for shorting opportunities. When you now go onto the weekly chart, right? When you go onto the weekly chart, you'd have already seen this imbalance here. See right there, that's imbalance right there inside a monthly bearish order block. The further you go onto a lower time frame, you can see there we've got a daily bearish order block. So all this rally here, you see all this move to the upside, shouldn't have even bothered you as a trader, because you're like, okay, I'm gonna wait for my price point to be reached. What would have been your price point here? Your bearish order block, because you'd have been looking for shorting opportunity, and the confluence here is quite high inside a monthly PD array, inside a weekly PD array, and then we've got a daily PD array, a premium array in terms of a bearish order block. And you can see what happened after that. Boom, market crashed. So it's those type of things that I want you guys to improve on in terms of when you look at the markets. Focus on those aspects of the market. Once you know your directional bias, especially for dollar, once you understand the directional bias for dollar, things like this should be easy. You can see there, right here, bearish order block, fair value gap. Look at the previous H4 candle. That's where it came to, and then boom, market crashed. This is where the longs on NZD/USD came about. You see, NZD/USD was in discount. So yeah, that's pretty much what I just wanted to tackle on, just to ramble and talk about something so that you can pick a few things. And if you have any questions and you're in the mentorship group, just send them on the group. I'll definitely be responding to those questions. So yeah, I hope you guys have picked a few aspects of how the market works, of how we trade in our mentorship, and what things that we look out for. And of course, we do go deeper into this type of teaching in the mentorship. And if you are not part of the mentorship and you want to join, just send us a message. And for those who haven't subscribed, guys, to the channel, if you are new here, just click the subscribe button and make sure you've got your notifications turned on, because I'll be uploading more educational content for free, just like this one here, where I'll just be talking, trying to raise your awareness on how we trade in our mentorship group. So yeah, with that, that's pretty much about it, guys. I wish you nothing but the best and good luck in your trading. Thank you.